months ago, we held absolutely zero Bitcoin. It was just an idea for us at the time. And if you fast forward and you go through those 8 months, what you'll find is that we went through a rather extensive process that brought us today to holding more than 15,000 Bitcoin. So quite the journey. And some of the stats that you'll see on the bottom there was September 2025 was the very first time that we were a public corporation. It was the first time we were a publicly traded stock in the United States. And fast forward to today, we rank number 9th in terms of the largest public holders of Bitcoin. But it all starts with one decision that you have to make as a corporation. And for us, that decision was, what is the right asset for us to capitalize our corporation on? And when you run through the options that are out there, people commonly capitalize on the US dollar. You've even heard people talking about gold. For us, we needed the characteristics that Bitcoin offers to enable us to be successful in the endeavors that we've undertaken. So if you think about what is it that makes Bitcoin the most unique asset in the world, it starts with it being borderless. It's part of the reason why we're all here talking about a singular asset. Bitcoin doesn't know borders, it doesn't need to respect borders. This is an asset that is open and available to anybody on Earth. The second thing is it's one of the few assets on Earth, if not the only asset on Earth, that is verifiably scarce. You know exactly how many Bitcoin are going to be in existence. You know exactly when those Bitcoin are going to come into existence. And for us, when we started to evaluate the issues with fiat currency debasements, this is one of the primary characteristics you need to have if you want to combat that. The other one is it's sovereignly neutral. The world's been in a state of chaos here over the last year, and this point has become incredibly important. Nations are starting to understand the importance of having a sovereignly neutral store of value that you can transact in globally. Corporations are seeing the same benefits, and we're starting to capitalize on these. And the other one is it is programmatically sound. It's verifiable on every node at any time. But we had to find our way into the public markets. And that's a journey that not a lot of people actually understand, and there's a lot of nuance that comes with that journey. And for us, we ended up doing it through a reverse merger. For people that aren't familiar, what that effectively means is that we merged into a corporation that was already public. They were already listed on a stock exchange. They already had a history of filing. And there's something about that that's incredibly important, and that is the shelf offering. A WKSI shelf, or a well-known seasoned issuer, gives a corporation massive advantages that you don't get if you take other paths into the public market. Recently, you've seen a lot of activity around SPACs, companies that are using SPAC vehicles, special purpose acquisition vehicle or corporations, and using those as their entry into the public markets. The problem is when you come through a SPAC process, you have a long period of time before you can become eligible for a WKSI shelf. And what a WKSI shelf gives you the opportunity for is the immediate registration of securities. It's what allowed us to issue our perpetual preferred equity into the market on such a fast time scale. So it was a massive advantage that most people didn't really understand at the time, but I think that they're starting to now as they see the progress that we've made. And we started simple. If you rewind back to the summer of 2025, anybody who had been involved in the treasury sector knows there was a massive amount of excitement going on. Corporations were finding money everywhere that they looked. There was a lot of performance that was happening in MicroStrategy's convertible bonds, and because of that, the convertible bond investors were looking for who were the next corporations that were going to issue them. But we took a different approach. We skipped convertible bonds altogether. And it was a very important decision that we made because without making that single decision, it's unlikely that we would have been able to achieve the results that we had. And the reason was, immediately after all of these corporations got into the public markets and they completed their financings, they found themselves saddled by the debt that they'd taken onto the balance sheet, which stopped their ability to operate. It slowed them down. It ate the capacity on the balance sheet. We were unique in the fact that we took $750 million of equity only. And that was a decision that started early on in the process, well before we were even looking at becoming a public corporation through our reverse merger. We had to decide, how do you start with the simplest foundation that lets you be flexible as you enter the public markets. And for us, that was through doing a purely equity raise. We also did something that no other company had done to date, and that was we were the first ones to undertake M&A in this space. You've heard a lot of talk about mergers and acquisitions since we did this, but we were the very first ones to do it, and it was a very unique transaction. And I think that goes overlooked a lot, that you really need the right fit of corporations to be able to combine them to deploy this strategy. Semler Scientific started their journey in Bitcoin in 2024. They were the second public company in the United States markets to embark on the active strategy that strategy had deployed. And they were the first ones that took in the convertible bonds and started putting the leverage onto the balance sheet. At the closure of our acquisition of Semler, we combined, and that gave us immense scale that's very hard to replicate. It gave us an additional 5,000 Bitcoin on our balance sheet. And as a part of that, we were able to retire their convertible bonds to make sure that as a corporation, we were able to stay with a very clean balance sheet that was going to let us operate and do what came next, which we thought was the biggest idea. And that was digital credit. A lot of people are familiar with digital credit when they understand what strategy's been doing and they've been following the journey, and obviously at the scale they've been doing it, it's become a very huge headline. But for us, there was a massive benefit to being second. If you're first, you have to spend the time to develop these markets. There's an education process you have to go through, and strategy had to go through that the long way. They had to try and introduce different products into the market. You saw it with all the different perpetual preferred offerings that they have out there. And a part of that was keeping the market comfortable with the products that were being issued and helping them understand throughout that progression where they got to the ultimate product they wanted to launch, which was Stretch. Now, because we didn't get into the public markets until after Stretch was already public and trading, we had the benefit of being able to see the demand. The Stretch IPO was 4.6 times oversubscribed. That means they had 4.6 times the demand for what they actually issued. It showed that there was a product market fit, and it showed that institutions and retail investors wanted this product. And what was unique about this product was it paid you every month. It paid you dividends monthly instead of quarterly, which is what you saw in all of the other perpetual preferred instruments. And so that was a really big unlock, and we took note of that. The second thing we understood as an asset manager was that we've got a retirement crisis in the United States. There's 11,400 people that are hitting retirement age every single day. And if you think about the portfolios that retirees are working with, it's an adjustment period, because you're going from where you're living on the income from your job, it's funding your day-to-day living expenses, to now you're living off the assets you're holding. It's why you commonly hear about the 60-40 portfolio, where you start to lean your portfolio towards the fixed income component. You need that cash flow to live. So we knew there was immense demand that was coming for these types of securities. The third one was we were starting to see the issues get highlighted in the private credit markets. Liquidity is becoming one of the most important things you can have in a security in the market. You're seeing this as all the redemptions begin to roll in the private credit instruments, and they're getting frozen. They're freezing the redemptions, which effectively means you can't take out your money. You're stuck in place. And these instruments we're launching with the perpetual preferreds are liquid. They trade every day that the market's open. You can buy it one day, you can sell it the next day, you can buy it one day and sell it the same day. They're very liquid, and they're deep markets, and that's critically important. But here's what it takes to actually issue digital credit. And I think this is misunderstood by the market as well. Early on, I was one of the initial believers that thought that digital credit was going to absolutely explode, that you were going to see all these corporations come into the market and see the benefits that we saw in digital credit and start to implement the strategy. What we learned going through the process was there are real scale requirements to get the demand, to get the capital to come into your product. And for us, that number was $200 million. We actually tried to start with the issuance at $100 million, and it was incredibly difficult to find the investors to put the capital into the product. And it wasn't because the product didn't have all the features that they desired. The reason was the investors that were participating in the IPO couldn't allocate enough capital. If they want to go in and make an investment, they don't want to do a small investment that becomes a very small part of their portfolio. They want to allocate $15, $20 million to this, and to do that, they don't want to be more than 10% of the offering size. So as soon as we raised the issuance up to $200 million, the demand flew in the door, and we were nearly 3 times oversubscribed on the offering. The other thing that investors look at is the very first security that you start with. That's your common equity that's trading out there in the markets. The common equity got highlighted with strategy as a core part of the way they were able to achieve the success that they did. And for companies that are investing in digital credit products of new issuers, they want to know that you have the liquidity in your common equity to be able to achieve similar results. If you need to raise capital, do you have the daily volumes to be able to do that? That was a very important sticking point for them. Another one was the amount of coverage that we had on the balance sheet. This is how much Bitcoin were we holding relative to the issuance we were putting into the market with SATA. It was about 2.0 was the floor that they wanted to see. They wanted you to have 2 times the amount of Bitcoin than the security that you were issuing. That was a gating factor for a lot of investors. And that's the importance of keeping a clean balance sheet that's unencumbered. You need that capacity available to you to be able to issue. And the third one is they want to know how much dividend coverage do they have. And with dividends, it's very interesting because when you issue a perpetual preferred equity, the capital that initially comes into you, there's no repayment on that. There's no maturity of that. It's not a debt instrument. It is an equity instrument. So you're not repaying the principal. What you have the obligation for is the dividend payments every single month. And because of that, we had to do something that even strategy hadn't had to do yet, and that was introduce a US dollar dividend reserve. We were the first ones to have a US dollar dividend reserve. But they're looking at the large picture here. They're looking at the combination of your US dollar dividend reserve and the Bitcoin that is backing these instruments. And for us, we have 20 years of dividend coverage on our balance sheet today. And that's incredibly unique when you think about the fixed income market, which typically relies on future cash flows to pay the dividends. And in the age of disruption that we're seeing now with AI coming on and seemingly wiping out entire sectors overnight, having the assets living on your balance sheet that are verifiable 24 hours a day, 365 days a year is an incredible advantage for issuers like ourselves. And it succeeded despite what the market was doing. Anybody who was in Bitcoin who's been paying attention for a while will very much remember the period between October and February. We did the IPO in November. Bitcoin had started drawing down. It came down from its highs in October of around 126,000. By the time we did our issuance, it was down to about 100,000. Then, after we closed the Semler Scientific acquisition, we had additional scale. We could issue more SATA into the market, so we did a follow-on offering. We did that offering in January of 2026. I'm sure many people remember January of 2026. This is when we were getting down to around $80,000 per Bitcoin. And even after that, when we got done with both of the initial issuances that got us to that $425 million notional outstanding, we were able to use the ATM on SATA because it was hitting its par price during one of the deepest corrections that Bitcoin has seen. It was a 50% correction. That was when we knew that the product had demand. It's how the product performs when the market is not in your favor that tells you whether people want it. And that is what we saw with SATA. But we had to continue listening to the market. When you first issue a security, you have the desire to be different. You want to change some things. You want to target different pools of capital that are out there. And for us, we looked at this as a vehicle that was competing against total return funds, which is why initially we had a wider range than what you saw in an instrument like Stretch. But after months in the market, we started to receive the feedback. And it's important when you're hearing from your investors that there is something they would like you to change that's critically important to them, that you listen and you make the adjustments to make sure that the product you're issuing meets all the needs of the people you're trying to bring into that instrument. And for us, that meant narrowing down to a target trading range of $99 to $101, a single dollar of variation around the par price of $100. That was important. But that last point in the bottom right corner was perhaps the most important. Early on, we had the ability to issue SATA below $100. If it was in the range, we could have issued the security. That brought uncertainty into the market about how we were going to operate and manage the security. They wanted to know that we were going to be very disciplined in how we were going to issue the security. And that took a commitment to say, we will not be the issuer of SATA below $100, the par value. And that point is critical for bringing volatility in and helping it trade into a tight trading range. And it happened. When you look at this chart, it looks like a very volatile chart. And this is what the journey is when you launch a new security. There's a lot of trading dynamics that happen with people that enter during the IPO. You get a distribution that happens with that initial supply. You also have that same impact when you do a follow-on offering. You're issuing new securities into the market. Those shares begin to trade in the market. The volatility starts to pick up. And you can see that we peaked out around 44% volatility, which is not the desired volatility for this instrument. But then we narrowed the range. We put out the guidance that we would not issue below 100, and that volatility has since that time been coming down drastically, and we're now in single-digit volatility and going even lower. So this is exactly what we wanted to see as the security matured in the market. The other thing that we saw was the demand increased every single month. The big day around these instruments is the day before the ex-dividend date, the last day you buy the security before you're entitled to the economic benefit of the dividend that's being paid. And you can start to track the performance of the security and measure it against that day. And what you'll see each month is steady progression. We had more and more volume on the security, and we've had higher and higher closing prices every single month since the security's been in existence. The other thing that we saw is that it continued to hit the par price. $100 is a very important price. We can't issue the security below $100. Issuing the security gives us the ability to go and buy more Bitcoin. In 50% of the months that SATA's been in existence, it's hit the par price, and in the last 2 months, it's stabilized since we made the changes. That's a result of listening to your investors and making the changes necessary to ensure that your product is going to succeed. And the reason we believe that these products are so important is they are a step function higher in income for investors. SATA right now yields 13%. And you can ask yourself, why can it yield 13%? And that's made possible by Bitcoin. We have a belief in the long-term performance of Bitcoin that it'll grow at a 30% compounded annual growth rate. So we're able to issue a very attractive yield to our investors because of that. What you'll also notice on here is some of the most common categories of income products investors are buying don't even outperform the rate of supply growth in M2 monetary supply. That rate is about 6.7%. So you're losing value in each of those other products. That's what makes these digital credit products so important to the market. People need those returns to maintain that purchasing power. But then we did something that I don't think the market was really expecting, and we strengthened our own treasury. I mentioned earlier that we had 18 months of US dollar cash reserves, and that money was sitting in things like money market funds and treasury bills. And so we had a decision to make. We had a product in the market where we're going out and we're educating investors about the ways to manage short-term capital, moderate-term capital, and long-term capital, but we weren't following that ourselves. We had 18 months sitting in cash. We had plenty of moderate-term capital that we could put somewhere else. So we decided to take the approach of we would put part of our treasury in digital credit instruments. So we put our capital into Stretch, which earns an 11.5% yield today. The difference between where we were holding it and where it's held now for that remaining 6 months is $3.9 million a year. That's an incredibly impactful number for corporations like ours, and we believe it was the right choice. It was confusing to several investors, but that was largely because they didn't understand that this is incredibly common practice for financial services institutions. They're regularly buying the credit products and the paper of the other issuers in the space. We're doing the same with our balance sheet. And that brings us to the journey. You can see here what our timeline looked like. This is the full 12 months. So I told you at the beginning, 8 months ago, we held exactly 0 Bitcoin. We were just starting. But it started well before that. The very first time we started contemplating the reverse merger was in May. It took us from May to September to get into the public markets to be able to implement this strategy. And through that process, we went through the journey that I just discussed, becoming public, getting our Wixie shelf active, our Semler acquisition, the SEDA IPO, the SEDA follow-on. All of these things led us to being able to accumulate Bitcoin at an incredibly rapid pace, where we accumulated 15,000 Bitcoin over that 12-month journey. And it brought us to perhaps the most important point, which is we were able to do it building an incredibly clean capital structure. We have two products that we're issuing into the market. It's our common stock, which is engineered to be volatile. It's meant to be more volatile than Bitcoin itself, which is important for people that want to trade volatility or for investors that have deep conviction in Bitcoin that want the opportunity to potentially outperform the asset itself over a long period of time. But then we have a very simple product in SEDA, which is for income. Investors need income. It's a core part of your life. And Bitcoin makes it possible for us to provide better products to them that increase that income. And our company is structured in such a way that we can work within the markets in a variety of ways. We're an asset manager. That's our operating business. That means we issue ETFs into the market. We have about 11 active ETFs at the moment, and we manage about $2.8 billion in assets across those ETFs. We understand these markets. We understand the regulations, and it's what made us be able to move so fast. The second thing is we have the structured finance component of our business. This is where we're securitizing around our balance sheet. That's the issuance of SEDA. That's the engineering around our common equity. But third, and perhaps most importantly, is as a company, we have a voice. We have one pillar of our core business that's called True North, and this has been the ongoing largest retail investment community in this entire space. We have the platform to put out the institutional grade research. We have the ability to communicate the complex topics to the investors out there in the market, as well as the institutions who are looking at ways to adopt these products in their own portfolios. And this is what makes it all possible. There's been a significant lack of innovation in the financial markets. Mutual funds since 1940, largely unchanged. ETFs since 1995, largely unchanged. Fixed income really hasn't moved at all since 1985. You get slight variations in the creations and the redemptions, and that's about where the innovation stops. With digital credit, we're working on changing this. We're working on bringing and reigniting fixed income securities in the market, and we're innovating around that in the way we pay them, in the way we manage them, and in the way that we foster the liquidity around those products. Bitcoin gave us the hurdle rate that we as a company need to achieve. And because of that, the traditional financial markets gave us an opportunity. It let us take an asset that's better than anything that they have out there in the market today and allowed us to innovate around it. There's a $300 trillion credit market that's out there, that's underperforming, that's not even matching the debasement of the M2 monetary supply. That is our opportunity. That is what's going to give us the scale to be able to issue and to be able to bring that capital into the Bitcoin network. So we started as a private asset manager. That was our DNA. That was our business. It helped us understand the regulations. It helped us set the foundation for embarking on this new strategy. But we believed in Bitcoin. All of us at Strive are Bitcoin believers. We've been in it for a very long time. My first time in Bitcoin was 2013. I've been on this ride for an incredibly long time. We believe this is the single best asset for individuals to hold, for corporations to hold, and for nations to hold. And we think that innovation is just starting, and the awareness as the world continues to focus on the issues with our current financial system, more and more of these individuals, corporations, and nations are coming to Bitcoin. We became a public company, we built our balance sheet, and now we're expanding into new markets. We're doing that deliberately, and we're doing that with focused execution and making the right decisions. But that's not what I want to leave you with. What I want to leave you with is that digital credit was just one idea. This is one opportunity, and we believed it was a big one. It's why we're pursuing it with everything that we have right now. But it's hardly the last opportunity. And that's what you learn being in these rooms, being in these halls, and meeting all the builders who are looking for ways to make Bitcoin the foundation of every product and of every portfolio. So I'm encouraged every time I come to one of these conferences and I hear the way people are innovating, and I encourage them to continue to push, because we've not yet reached the boundaries of Bitcoin, and I don't think that we're going to be able to. Thank you all. Appreciate the time today.
One question? Anybody? I've got one then.
Lay it on me, Ed.
Yeah. So you're not trying to catch strategy. Nobody's trying to catch strategy. So what's your relationship with strategy? Is it a copycat? Is it complementary? How would you describe the relationship with strategy?
You know, I would describe us as very complementary to strategy. You know, you can look at the product and it's incredibly similar. It's nearly identical to the structure of Stretch. So absolutely, we learned from what they did. But there's incredible power in having multiple issuers in the market. If you think about things like launching exchange-traded products around digital credit, you need more than one issuer in the market to be able to do that. So for a company like Strategy, they welcome second issuers. It's why Saylor's so open about the playbook, about all the challenges they've gone through implementing this, helping you think through the regulations. They will coach you. We have a very close relationship with them. They're corporate treasurers on our board of directors. You know, that's how close the ties are. And so we believe that having the combination of the two issuers out there in the market is going to allow us to achieve something that we wouldn't be able to do individually on our own. You know, you're right. Do I believe that we can catch strategy in Bitcoin? No. And I think it would be incredibly arrogant of me to say so. But I do believe we could become the second largest holder of Bitcoin. And I think that's a lofty goal, and it's one that's very much worth pursuing. Appreciate it.